Hello, everyone. I am Julia Carlson. I'm the CEO and founder here at Financial Freedom Wealth Management Group. And today I am going to talk about a very simple overview of how income taxes work. So I call this tax season that we're into right now, and we can now file our taxes for 2021. And guess what? There are still some things to do, or there's still some things you can do to reduce your tax liability for last year, even though we're into 2022. But before we go there, what I thought I would do is share an overview of how our income tax structure works. All right, so generally speaking, most income that you receive is taxable. So this is considered your gross income. So this could be your salary or your wages from work. It could be investment income in the form of dividends or interest from your investment company or your bank. It could be you're getting a pension and that's coming in. And could also, if you're retired, include Social Security. Now, not 100% of Social Security is taxed, but either a portion of it will be taxed based on your individual situation. So there's a lot of different income sources that will go into your formula to come up with your gross income. And then from your gross income, adjustments are subtracted. So these adjustments may include contributions that you're making into your retirement plan or your IRA. If you are self-employed, it could be also half of your self-employment income tax is deducted as an adjustment, and other various items. Then you get to what's called your adjusted gross income. So all of these words that I'm saying, if you look at your 2 pages of your 1040, you will be able to see most of these things that I'm talking about on the top page of your 1040. So from your adjusted gross income, that's where we take deductions. So it gets a little bit more complex here. So there's 2 options, 2 choices that you have for deductions. You can take what's called the standard deduction. Currently for 2000, let's talk about 2021 because that's what you're going to be worried about now, filing taxes for last year. And that was $12,550 for single, or $25,100 for couples married filing jointly. So if you don't have enough deductions, then you would automatically default to the standard deduction. That is taken off your adjusted gross income, and what's left is called your taxable income. That is the figure. You would then go and look at the tax brackets and figure out which tax bracket you're in. We're not going to get into that detail though today. So the other option for your deduction is what's called, you would itemize your deductions. So itemized deductions can include the state and local taxes. If you're familiar with something called SALT, that stands for state and local taxes. I know in Oregon that we have quite a bit of state and local taxes because of our property taxes. If you own real estate in Oregon, that falls under that. And it's limited to $10,000 that we can deduct on our itemized deductions. It also includes charitable contributions, interest on a home mortgage, and other odds and ends that you can take that you can use on your itemized deduction. So if you itemize, it just simply means that what you spent on all of those things is more than your standard deduction, and then you can deduct that from your adjusted gross income. So it's really important to understand just the basics of how our income taxes work in America. And what we found is clients kind of typically maybe shy away from it or feel like it's too complex to understand. And then as a result, aren't getting in there and creating a proactive plan for their taxes. So like I said in the beginning, it's not too late to think about ways that you can get more deductions for 2021 before you file your taxes. So if you would like to talk to one of our financial advisors about that, we would be happy to entertain that conversation. You can head over to our website and click on complimentary consultation, and that will take you to where you can schedule a complimentary appointment, talk to an advisor, and figure out, are there ways that you can save money in taxes and create a proactive plan to build your financial wealth and your financial freedom for your future, and not get stuck into thinking that you just pay taxes and that you don't have control over it, because you do have some control, and we want to teach you that. So I hope everyone's having a wonderful day, and we'll see you next time.